All right, good deal. Yeah, we are recording. I don't know. I see Steve still here. You know, most people don't make it up for the entire 24 hours. So um, we definitely record. We understand that, and so that's part of it. One thing that's pretty cool, if you look at, is here's a quick look at the map right now. You can see everybody still tuned in to the event. So have a great crowd in the room, and you know, you guys are awesome and make these things fun to do. We started out doing it sort of, it was a crazy idea that I had, and that was in August, I believe. And since then, we have this is now our fourth event, and so yeah, I think, you know, it's just a really cool thing. You know, we've done Saturday classes that are pretty cool, you know, where we'll have 4 or 5 speakers, but then we you know, started doing this, and what really got it is I did a webinar with these guys that trade the London session in currencies, and they said, hey, have you ever done a webinar at, you know, basically 2:30 Eastern time, you know, where we trade the London session? I said, no, but we'll try it. And so I was actually up in Kentucky meeting with Hubert at the time, who you guys heard from earlier, and I had it scheduled. And so I woke up at, you know, 2 or 3 or whenever it was, and did this webinar with Bill Horder and Ricardo, who came on and did it. And I think there were like 300 people that showed up. And I thought, you know, it's definitely a global market, and you know, what if we tried doing a 24-hour trade-a-thon? So I put that together back in August. It was a big success. You know, we had really good feedback, and every time we do them, it seems like you guys enjoy it. So we'll keep, you know, as long as you're getting value out of it, we'll keep you know, doing it. So you know, hopefully it'll go well. Now tonight's going to be a little bit different. Because of the fact the guys that typically do the London session for us on these trade-a-thons aren't able to do today's event. So basically, the way the schedule is going to work is I'm going to do the next. I'm going to be with you guys for the next hour, and then after I wrap up, we've got Dave Osman of Metastock that's going to come on here and talk about forecasting, and then after he finishes, the live version of the trade-a-thon will effectively be over. So because we don't have the guys that typically do our London session on board, we're gonna end the live session. But I know some of you guys who missed some of the earlier sessions, what we're gonna do is replay some of those, and so we'll have that going for the full 24 hours for you. But again, it's let's see. Let's see, yeah, people all over the world do it 3 to 4 times during your 24-hour sessions. Bruce, you saying like split it up over different different time periods, and yeah, we might experiment with that, maybe doing like a 12-hour and 12-hour, you know, but it's just cool to do the 24 hours. Yeah, we will email you the full 24-hour session. So, but you know, I'm, you know, humbled that all you guys are still here. We appreciate it. As you guys know, TradingPub, you know, it's all about you know, free education, or as I like to say, you know, everything's priced at 100% off. So I hope that you enjoy these events, and we'll get the recording out to you. Well, something I'd like to talk to you about today, obviously you guys know that I've got this risk disclaimer. Anything that you do that has that can potentially make money, you can also lose money. So again, that's important. And you know, you guys have seen that before. But tell you a little bit about the Trading Pub. The mission of the Trading Pub is to provide a place for our patrons where they can hang out with some of the top traders in the industry. The pub is the place to receive quality education, all while interacting with traders and investors who are just like you. So, you know, basically what we try to do, obviously we want to learn about the markets. You know, we try to enjoy things. It's very laid back. We also give 10% of any revenues generated through Trading Pub to charities benefiting inner city revitalization, workforce development. You know, our website, you know, tradingpub.com, for those of you in the Twitter sphere, twitter.com/tradingpub, and then facebook.com/tradingpub. And really all we ask is just, you know, if you're going to be here, you be cool. You know, don't be the guy on the left, but, you know, be the Fonz, be cool, and enjoy what you're going to learn. So what I'm going to talk to you about tonight is a market that a lot of you guys might not necessarily trade, but it's extremely beneficial, and I'll go through several of those reasons. But real quick, type in a yes or no. How many of you trade on Nadex right now? How many of you trade Nadex products? You heard from Daryl earlier. I see my buddy Steve does. Matt does. Lots of no's, most no's. We've got a couple people that do. So hopefully this presentation will kind of be eye-opening to it. Arthur, it's not a broker, it's an exchange. So you trade directly on the exchange. And the way that it works, basically they're CFTC registered. So, which is the only CFTC registered binary options exchange. Yeah, they have options and spreads, and we'll go over the contracts a little bit. But the cool thing with it is that this whole exchange is built for individual traders like us. So, you know, when you see the word retail trader, that means that it's for an active individual trader, not for a hedge fund, not for a bank, not for an institution. But there's a low cost of entry. Every trade has limited risk. Every trade is fully collateralized. What that means is you put up the money for the trade, and that's the most you can lose. And there's a capped risk and a capped reward on all trades. And currently at this time, only a U.S. exchange that accepts direct retail members. And so basically kind of getting into what it costs. It's currently available for U.S. citizens only. They're going to be adding the ability to bring on out non-U.S. Citizens hopefully very soon. And so again, if you're not in the U.S., what you can do, you can get a demo account and test this out and be ready to go when it goes live for non-U.S. as well. But there's no membership fee. The initial deposit is only $100. That's the minimum that you can do. You know, I recommend typically putting $1,000 in. There's no commission on the trade. It's just an exchange fee of 90 cents per side per lot, and that's in and out. All right. If you're a U.S. citizen that lives abroad, you should still be able to open an account. So the expiration fee, 90 cents per lot, only on successful trades. And the cool thing with this, the fees are actually capped at $9 per order. So let's say I trade a 1 lot, 90 cents to get in, 90 cents to get out. If I trade a 2 lot, $1.80 to get in, $1.80 to get out. If I trade a 10 lot, it's $9 to get in, $9 to get out. If I trade a 20 lot, it's still only $9. If I trade a 30 lot, 40 lot, 50 lot, it's still only $9. So as you become a better trader and start to trade more size, that really can become beneficial to you as you're not paying additional exchange fees. So there's two types of products on Nadex that we're going to talk about. Number one is a binary option. Now think of a binary option basically as a yes or a no statement. A binary option is a simple short-term contract. They have intraday, daily, and weekly contracts. These are all limited risk contracts, meaning fully collateralized. And it's a yes or no proposition, very straightforward. So for instance, type in a market that you're looking at right now. So somebody type in a market you're looking at right now in the current price. So type in a market in the current price. Probably something trading like a currency pair or, okay, silver. Where's silver right now, Ricardo? Where's silver trading? Okay, Arthur typed in the Nikkei. Okay, the Nikkei at 158.80. All right, so that's one. Or crude oil, WKW. Let's use crude oil just because it's going to be easy because there's less numbers to remember. So crude oil right now is at about $92.50, $92.50. So the way a binary option would work is that Nadex would publish a contract that says, hey, at the end of the day, this binary option has a strike price of $92.50, which is right where we're trading. All right. Now, who thinks that at the end of the day, the trading day, so tomorrow afternoon, who thinks crude oil will be higher than 92.50, and who thinks crude oil will be lower than 92.50? So just type in higher or lower. So type in higher or lower depending on what you think. So Jerry, Arthur think higher, Gary thinks lower. So guys, this is a good example. This is how a market's made. All right. So most people think higher. We got a couple people that think lower. So the way this would work, let me just scroll up here real quick. Okay, I think Arthur said he thought it would be higher. Or Jerry thought it would be higher, Gary thought it would be lower. So Jerry, who thinks it's going to be higher, right? Jerry thinks it's going to be higher, so he would buy that binary option contract. So if the binary option is trading at 92, or if the strike price is at 92.50, all right, and then that binary option is basically about a 50-50 probability, right? Because it's right at the strike price. So at that point, it's a 50-50 probability, which tells you the binary will be trading at 50. All right. Now let's say that we say, hey, who thinks that crude oil will be above 93? Yeah, these are direction trades. Who thinks crude oil is going to be above 93? So then you start thinking, well, maybe not. Okay, so Charles says no. Sebastian says yes. All right. Well, the binary that might be the strike price 93 might only be trading at, say, 20 bucks. And let's look at an example. Let me pull it up real quick, and we'll look at an example. So let's go to the Forex market. Okay, we'll look at the Euro USD, and we'll look at one that's expiring at 3 a.m. Okay, so 3 a.m. Eastern time. All right, the Euro, we'll look at this binary option. Okay, this is a binary option for the Euro to be above 136 by 3 a.m. Eastern time. You see right now, the Euro is currently about 136.10. All right, so we're 10 ticks in the money basically. All right, yeah, I just did crude as an example. I wanted to show the Euro because currencies are a little more active here. So here's a look at the Euro, and it's at 136 is the strike price. So everybody understand that that's the strike price. So this binary option saying the Euro USD is going to be above 136 by 3 a.m. Now the way this works, at 3 a.m. this is going to be true or false, right? The Euro is either going to be above it or it's not going to be above it. So it's either going to be a true or false statement. If the Euro is above 136 even, all right, then this binary is going to be at 100. Okay, binaries trade from 0 to 100. So if crude, or if the Euro USD is above 136 even, this binary will be at 100. So for those of us that think that crude will be, or sorry, I'm still stuck on crude. The Euro USD, if we all think it's going to be above 136, all right, so we could buy this binary. If we buy it at 80, it's trading at 85. We buy it at 85, right? If the highest it can go is 100, then how much would we make on that trade? So if we buy at 85 and the highest it can go is 100, how much do we make on that trade? Yep, Jerry's got it, $15. Okay. Well, how much can we lose on the trade? Well, the lowest it can go 0, so obviously we could lose $85. And the cool thing with Nadex, if you look, it actually shows you max loss and max profit on the trade. So again, it calculates that for you, and you say, well, hey, what happens if maybe I say, hey, I'll try to buy it at 82? Well, then it tells you, hey, now your max profit's 18 bucks. Now your max loss is 82 bucks, right? So again, it's going to calculate that for you, that worst case scenario, you know your max loss on the trade. Now you might look at this trade and say, hey, you know, why would I risk $82 to make $18? And you have to think about it in a probability standpoint. If I'm bullish on the Euro, okay, if I'm bullish on the Euro and I look at this and the Euro is already at 136.10, basically I'm giving myself 10 ticks of room that it's going to still make me money. So if the Euro drops 5 ticks, I'm still above 136 even, I still make money. So that's why I have to pay more and have less of a reward. Remember, risk and reward, your risk and probability of success are going to go hand in hand. So the higher the probability of success, all right, the lower the reward is going to be. If the probability of success is very low, then the higher the reward's going to be, all right? So Arthur, yeah, so here's the way you can trade this in and out. So like, let's say we buy it at 82. Let's say you buy it at 82, and the euro rallies a little bit, and now the binary is trading at 95. Yes, you could get out at 95. So if that happened, if you bought at 82, you sold at 95, your profit would be $13. Now, if you hold it till expiration, it's either going to be 0 or 100. So again, that's the key. If you hold it to expiration, it's either going to be 0 or 100. So that's the thing you have to look at. All right. Now let's go look at another example. Here's the euro above 136.20. So this is a scenario where the euro would have to rally 10 ticks for us to make money. So if I think the euro is about to take off, all right, and I wanted to buy this at $23, then basically I'd be risking $23 to make $77 if the euro rallies 10 ticks by 3 a.m. Eastern Time, so in the next couple hours. So again, those are two different strategies. One strategy, you have the probability in your favor, you have a little bit of wiggle room. On the other strategy, you really need this market to move in order for you to make money. Now, if a binary trades at its strike price, then it's going to be at 50. So you can kind of factor that in. So let's say that you buy this at 23, and in the next 30 minutes the euro pops up to 136.20. You know that this binary will be priced at about $50. So you would have the decision if you say, hey, I'm long at 23, you know, it rallied up, I can double my money, basically I'll just get out at 50, you can do that and be out of the trade. Then it doesn't matter what happens after that point. Now, another option is, let's say that you're bearish on the euro, all right, is that basically you'd say, hey, the euro's at 136.10, I don't think it's going any higher. Instead of buying this thing, I'm actually going to sell it. So maybe I sell it at 20. So I'll make $20, but I'll risk 80. And you might say, well, hey, why would you ever risk? Yes, Arthur, if it went to 137, still max profit. So yeah, that's the thing is that you have a ceiling and a floor. But you might look at this and say, hey, why would I risk $80 to make $20? Well, the reason you would do that is that you have a high probability of success. So risk and reward, remember, you've got to look at your risk and reward, but you also have to think about your probability. And so let me ask you this question. If I told you that I could teach you a strategy that works 99% of the time, how many of you would blindly follow that strategy? If I told you tonight, hey, I'll teach you a strategy that works 99% of the time, how many people of you would would say, hey, I'll do it, you know, just sign me up? All right, and Charles made an important statement. He said, never blind. Daniel said no. Okay, here's the thing. You can't focus on a strategy solely off probability of success. Okay, what if I told you the strategy was, all right, what if I told you the strategy was you buy the market, all right, and you put a one-tick target. So let's say it's the crude oil strategy, all right? So you buy crude oil and you put a target at 1 cent profit, which is $10, and you don't use a stop. How many of you like that strategy? We're going to buy crude oil. We won't use a stop, but we'll put a profit target at 1 tick. Right. Now that you hear the strategy, you say it's not a very, yeah, exactly. Why is that? Why wouldn't you want to do that strategy? Because you'd have a lot of risk, right? The loss could be huge. Right. But it's 99% profitable. So you see that you have to think about risk in addition to thinking about probability of success. You know, when I said, hey, it's 99% accurate, you know, a lot of people are ready to sign up. And it's kind of a trick because you hear 99% and you think, yeah, of course I'd do that. But you can't just say, I'll do it because one bad situation might wipe you out, right? I guarantee you that would be the greatest trading strategy in the world until you had that one bad trade. And then the one bad trade, all your winners plus some, right? That 1%, that's what would get you. You know, honestly, crude oil moves so much, that strategy would probably work higher than 99% of the time. But the 0.1% or 0.2%, whatever that happens when you're wrong on that trade, that's when you get in trouble, all right? And you get the margin call, and you lose your money, and you got to, buy a plane ticket out of the country, all right? So again, you have to focus on risk and reward. But sometimes it makes sense to take inverse risk-reward trades. So you put the odds in your favor and you say, hey, I'll risk $80 to make 20 because I know that I'll be right, 85% of the time. Now, the key to this, what I do when I take a trade like that, is I use the 50 mark as a barrier. So let's say I'm getting in this trade because I think the euro is going to stay below 136.20. Well, if I short this binary and the euro rallies up 10 ticks and trades at 136.20, now all of a sudden my 80% probability has gone to a 50% probability. That's when I'd get out of the trade. So just get out of the trade, take my loss, which means I'd lose about 30 bucks instead of staying in to lose the whole 80. So again, does that kind of make sense to everybody, that reasoning and understanding of the contract? I want to make sure you guys understand that. Yep, exactly. Okay, cool. All right, good deal. Okay, so that's the binary option. And here are some rules if you want to write these down, things that I focus on with binary options trading. And this is a good rule for any type of trade. Number one, I'm not the smartest person in the world. Okay, every trader loses. Do we have any baseball fans in the room? Anybody that's a baseball fan? All right, when I was young, I unfortunately picked the worst baseball team to be a fan of, the Chicago Cubs, okay? I'm a big Chicago Cubs fan. Every year I get excited, every year I'm disappointed. All right. One thing that's helped me with trading is being a Chicago Cubs fan because I understand losing is part of it. All right, now hopefully I won't be losing forever. I hope that at some point that the Cubs will go back to the playoffs. But again, it's patience, okay? It teaches, yeah, like Leo, you understand. You're a Mets fan right now, okay? But you're going to lose in the market. So you have to remember that you're going to have those losses. You're not the smartest person in the world. And it's people that think they're the smartest person in the world that end up with issues where they blow up an account because they think they can't be wrong. So always remember I'm not the smartest person in the world. Number two, never look for a trade just for the sake of a trade. Always have a reason or a thesis behind a trade. I'm getting in this trade because I think the market's going to do this because of XYZ. I'm going to get in this euro trade because I think that there's big resistance here. We just broke a trend line and the euro's going lower, so I'm going to take this bearish position. I'm not going to take this bearish position just because I think, hey, I can make 20 bucks by taking it and odds are I'll make the money. Okay, I have to have a reason to be in the trade. When I'm bullish, I look for a binary around 60 or 80 in price to buy. When I'm bearish, I look for a binary to sell around 25 to 40. What that does is I'm putting the probability on my side. Okay, I'm giving up a little bit as far as the reward goes, but I'm giving myself a bit of an edge. So that means I don't have to be dead right on the market. I could be right on the market and I make money. I could be neutral, meaning I think the euro is going to go up. It doesn't go up. It just stays the same. I still make money. Or I could think the euro is going to go up. The euro actually goes down a little, but not down enough, which means I still make money. So those are the situations I want to be on. Now, if I think that a big move is going to occur, like I think, hey, this euro's really going to drop, that's when I'd go to the inverse risk reward where I'll say, hey, I'll give up some probability of success, but get bigger reward because I think a big move's about to come. And then the key with risk is I use the 50 level on the binary option as an indication of the trade and adjust the position accordingly. So again, those are the rules of the binary options that I use. And I'm going to go back to the example. I think it's easier to see live examples than examples on a chart. So here's a look at this euro option that we just looked at, the one trading at 18 by 26. All right, and here's a look at the euro USD. And it should load a chart here in a second. Charles, the important thing that the market has to do with the stock you buy. Okay, who remembers the day? Those of you that were trading around, we had the big financial crisis back in 08, in '09 before the market turned. Who remembers the day the Dow? I think it was down like 750 points. Do you guys remember that day? It was a really bad day in the market. The Dow was just got hammered, and on that day actually, here's a little S&P 500, which are the top 500 stocks in the world. There were 499 stocks that were down, and one stock that was up. All right, 499 stocks were down, one stock was up. Who knows which one stock was up that day out of the S&P 500? No, it wasn't Exxon. That's a good guess, though. I'll give you a hint. You'll eat it if you have a cold. If you're feeling bad and you have a cold, typically you'll eat this. Campbell's soup. Okay? Come on, guys. You eat chicken noodle soup, right? So Campbell's soup was the only stock in the S&P 500 that was up that day. So the question being, why do I need to know what the overall market's doing if I'm trading an individual stock? Is that most stocks are going to follow the overall market. So if we have a strong up day, if we have a strong down day, most stocks are going to follow that. So even if you're trading a stock, you should still have an eye on the overall market because most stocks are going to do that. Now, that day that 499 companies went down out of the S&P 500, does that mean that they're all terrible companies? No, absolutely not. It just meant that everybody was selling. The entire market was going down. So on that type of a day, would you rather be shorting individual stocks or buying individual stocks if you're trading? Well, obviously you'd rather be shorting, okay? Now, would you rather take the odds, okay? Would you rather take the odds that you're going to pick the Campbell soup out of the market, or would you rather take the odds, hey, I'll pick one of the 499 and be short? Well, obviously you'd rather be short. And yeah, sectors are important. So for instance, if you're trading Apple or Google or Priceline, stocks like that, obviously you'd be focused on the Nasdaq, right? If you're trading, broad-based names like, Procter and Gamble, J&J, Cisco, things like that, you'd look at the Dow. Or if you're looking at a stock, you're trading Apple, like I said, or Google, you could go even further than the Nasdaq. You look at internet sector. If you're trading Exxon, look at oil. You want to know what oil's doing if you're trading the oil stock. So again, that's important. When I say overall market, that's what I mean, that market sector. So good question, Charles. All right. So again, here's a look at the euro that you see from today. Obviously, we rallied up, had that big rally, and then we started to sell off. This is over the past few minutes. We had bounced off the top, come down. So we've sort of been between 136.04 and up to 136.14. Now, the cool thing with a 5-minute chart is it makes small moves look big. Now, if we go back to, say, a 4-hour chart, you see that the euro had a pretty negative day. All right, back since the start of the year, we started at 130, basically up, opened the year about 137.50, and pretty much as a trend, the euro's been down for the month. Okay, everybody see that? Okay, now let's go and try to look at that binary option. All right, let's see, and we'll look at a quick chart of that binary option. All right, and notice the movement. So this binary option, as the euro moved up and down, the binary option moves up and down, right? So again, if the euro needs to be above 136.20 at 3 a.m., you see at this point, this is a point when the euro's rallying. As it sells off, that's a point the euro's selling off. So you see some pretty good movement in here for trading in and out. Okay. All right, so again, binary option strategy, low probability, high reward. We kind of went over that already. We went over the high probability, lower reward. That's buying a binary around 85, selling a binary around 15. Now, yeah, we'll look at the yen on this next scenario if we can. Okay. They also have bull spread contracts. Let me ask you a question. How many of you have let's say you were looking at the yen, Charles, and you say, hey, this yen is a great short. The yen's just a great short. And you get short, you put your stop in, you go make your chicken noodle soup, you come back and you realize you got stopped out to the tick, and then the yen just absolutely falls out of bed, drops 100 pips. So basically you were right on the trade, it went right to your stop, it stopped you out, and then it dropped. How many people have had something like that happen before? I know I have. Yeah, it's frustrating because it's like, I was right on that trade, just my timing was off a little bit or my stop was too close or whatever, but you missed the trade. Well, the way that these spreads work is basically you trade a range of a contract, okay? So this allows you to trade without a stop effectively, but still have the risk control of a stop, okay? And we'll go through an example of that. So it's trading a range, and each tick is going to be priced to $1. So with more volatile markets, we try to buy near the floor and sell near the ceiling, and I'll show you some examples of this. So this is really a cool thing, and it's pretty powerful. Let's look at, see what we have here on the US yen. Okay. All right. So here is a look at the US yen. Okay, you see the US yen's currently trading at 104.93, right? So trading right around 104.93. Now let's say that we feel like the yen has the opportunity to run up 100 pips, right? Okay, let's say we feel like the yen has the opportunity to run up 100 pips. Well, with this contract, we can buy the yen here, all right? We can buy the yen, and let's say we'd buy it at 104.99. Our max loss on this trade is $9, okay? Basically, we're trading a range. We're trading the range of 104.90 to 105.90. So again, we're trading this range. Now this range, and just for example's sake, it expires at 2 a.m. So we would have to really think, hey, this yen's about to move. If we wanted to do a longer term trade, we could do the daily contract. But just for example's sake, I want to go through this with you. Now, basically, the way this spread works is that you give up a little bit of your edge. So the yen's trading at 104.93. To get in the spread, you pay up about 104.99. So you give up about 5 ticks, right? So you give up about 5 ticks on the US yen. So yeah, and I'm actually looking at I'm used to trading currency futures. This is the cross pair. So this is the US yen. So if we felt like the yen, we felt like the yen was going to drop against the dollar. So the US yen would go up. So basically, if we feel like the US yen is going to go to 105.50 over the next hour, okay, we think the US yen is going to go up to 105.50 over the next hour. We could buy this spread contract, pay $9, all right, and have $9 worth of risk. Now let's say we get in this trade and the US yen drops down to about 104.80, all right, so it drops below the floor. The most we lose is $9. If it goes to 104.80, 104.50, 103 even if it drops 200 pips, the most we lose on this trade is $9, all right? Let's say it drops down to 104.80, but then it rallies back, we're still in the trade. Expiration date, we're still in this trade. Now this is different than binaries. It doesn't have a settlement of 0 or 100. It's going to cash settle. So if we buy it at 104.99 and at expiration it's trading at 105.10, basically it cash settles, which means we bought 104.99, we sell 104 or 105.10. So again, this is like trading the US yen, having a defined risk of $9 and not having to worry about getting stopped out. Does that kind of sound appealing to you guys? I mean, it's a very powerful strategy. Now, what is very powerful about this is the fact that you can trade these around news announcements. So let's say that we had, yeah, it's better than Forex. So let's say, and you guys know, like we've got the jobs report coming out Friday. Basically, you can put on a trade. So let's say that we have the jobs report about to come out, all right? So what we could do, we could buy this contract here, basically pay $9 and have the opportunity to make $91. And then we can come in and we can say, okay, let's look at this contract. What happens if the pair drops? I can then sell this contract for $7, all right, and have a max profit of $93. So if the US yen moves 100 pips either way, crazy news comes out, we profit on the trade and we basically risk $7 on one, $9 on the other, so $16 total. And Jerry, yeah, it depends how, so you see the bid ask there? We could get filled selling 50 contracts at 104.83 right now. Our max contract until another bid would come in. So again, we'd be guaranteed to get filled at 104.83 if we sold that. So typically you can trade up to 50 to 100 contracts. Now during the day when it's more liquid, typically you'll see that number at 250. So where you see 50 right there, typically it's 250. And typically the spreads during the day are a little bit tighter. Right now we're kind of trading in the low volume period, so that's what you're seeing. But still, the real power of these spreads is setting up a situation like that. And Charles, basically this works, it's $1 per pip. So it's basically the equivalent of trading a mini lot if you're familiar with Forex. So if we wanted to make this basically like being in a standard lot, we trade 10. So put a 10 lot on, and basically I'm short the yen at 104.83. So I'm giving up some ticks to do that, but I'd be short at 104.83. The most I can lose is $70. So the most I could make on that trade, if the US yen were to really drop, if that pair were to drop, I could make $930. And it's just a multiplier. You know, if I decide, hey, I don't want to trade 10, you know, I go to 1. Right. Yeah, the yen's 104.93. So the reason I'm having to give up some ticks is because I get that insurance. So I'm able to limit my risk. So that's what I was saying. This is a strategy you do when you feel like there's going to be a big move in the market, right? Okay. Now let's think of another scenario. Let's go one step further. Let's say Charles has a Forex account, all right? And let's say that Charles is long the yen, okay? Let's say Charles is long the yen, all right? He could be long the yen in his Forex account and then come in, and instead of putting a stop in, he could sell this spread and he's protected down to 103.90. So now he's long the yen in his Forex account. He's got basically unlimited reward because it could go up forever, but he's protected all the way down to 103.90, 1-for-1. Okay, because Charles, if you buy the euro, or sorry, if you buy the US yen, if you buy one mini lot and it drops 90 pips, how much money do you lose? So you buy one mini lot, it drops 90 pips, how much money do you lose? You'd lose $90, right? So the way that works, it's kind of like a hedge trade basically, is that you would lose 90 bucks on that trade, but you'd pick up about 90 bucks on this trade, so it'd be a hedge trade. So you're protected basically for 100 pips on the trade. So it helps keep you out of that noise zone. It really helps you from that situation on the stop. Right, yeah, it depends on the value of the yen. So just trying to keep it simple with the dollar for dollar. All right. So again, that's a very powerful thing. If you've traded before, you definitely understand that. And we actually put together, we've got a free video library if this seems of interest to you. If you go to this link, I'll type it in real quick. If you go to this link, I'll put it in the announcement too. That's a free Nadex library that you can go in and learn about all of those strategies. So with spread trading, with more volatile markets, try to buy near the floor, sell near the ceiling. For less volatile markets, you can basically take the other side. It's kind of like an insurance company. So let's say that I'm looking at a trade like this, okay? Let me find this. Let's say I'm looking at a trade like this, and I say, hey, you know what? I think I'm going to pull this up, and the yen is trading at, let's see if I can find a good example. Might be tough because we're getting close to expiration. Okay, not a good example on the yen, maybe on the euro. You see this? I want to kind of try to explain this line of thought to you. Okay, here's an example. Yeah, and Forex is notorious for that. So let's say, see the euro here, all right? Let's say that I think that the euro's not going to move a whole lot, all right? So basically, you see this is, this has a ceiling at 136.60, okay? 136.60. Now, it has a floor at 135.60. The euro is currently at 136.12, right? The euro is currently at 136.12. What you can get, and you can't see a good example here because the market's basically trading right in the middle, but a lot of times, and let me see if there's an S&P contract right now because this might make it a little more. Go to indices, US 500. Let's see where we are. Okay, who can tell me where the S&P is currently trading? Okay, should be trading right around 1835.50, right? All right, so here's an example. Okay, this is a bull spread on this is a spread on the S&P. The S&P right now is trading 1835.50. Let's say that I'm looking at the market and I think, hey, you know what? I think we're going to sell off to about 1830. All right. I think the market's going to go down. I think that, it might get to 1832. There's a lot of support there, but, if I'm really lucky, it'll get to 1830, but I don't think it's going much lower than that. All right. So if I short the S&P, basically I'm going short at 1835.50, right, Jerry? So I'd short it at 1835.50. Well, if you look here, Nadex spread for 1830 to 1870 is trading at 1838 right now. So that's a 3-point difference right there in 1835.75 or 1835.50 and 1838. So basically what you're seeing here is because you're giving up an edge, right? Or because you're limiting your reward, because if the market drops 10 points, the most you can make on this trade is down to 1830. I can get short the S&P at 1838 right now. So if I felt like the market was going to drop, but it wasn't going to drop that much, am I better off being short at 1835 or am I better off being short at 1838? Better off being short at 1838, right? If my plan is to get out at kind of at 1830 either way. So again, that allows me to have an edge on the market. So if the market just sort of stays the same or drifts up, as we get closer to expiration, the price of the spread is going to have to come near to the price of the underlying because it cash settles. So that little edge that's in there, that 3-point edge, will continue to shrink. So basically a strategy like that, if you feel like the market's going to be slow or not move a whole lot, is to sell it, take advantage of that edge, and pick up the 3 points. So something else you can even do if you want to arbitrage it, basically you buy the S&P futures, you sell the Nadex spread, and you've got a locked in, 3-point profit. Now what you have to be careful of is, okay, what happens if we drop below 1830? So in that scenario, let's say we buy the S&P and we sell this Nadex spread. We buy the S&P at 35.5, we sell the Nadex spread at 38. As long as we stay above 1830, I make the guaranteed profit of about 2.5 points. Does that make sense to everyone? That you can basically do that? And that's kind of the cool thing to do. So basically what I would do is I would sell 5 of these. I'd buy, yeah, it's like option time decay. So basically what you do, and that's why I tell you that when you remember my rules, the overall market direction is so important. There's so many different ways you can do this. You can construct this strategy in a bullish situation or a bearish situation, but you definitely want to construct it in the way you think the market's going to go. So again, that's a kind of a cool thing to do. So if you're feeling like the market's going to go down, you're better off selling this Nadex spread than you are selling the market, unless, of course, there's a flash crash and the market drops a ton. So again, that's important to understand. It's really a powerful tool. There's tons of things you can do. You can do this in Forex. Like I said, I kind of hate that it's midnight where the market's not moving much. You can really see the examples better, but hopefully this can show you kind of the power of what you see. I mean, for those of you that trade crude oil, like a Wednesday, you know, those spreads can be awesome. You know, if you can buy a crude oil spread and risk $10 to be, you know, long for a whole 100-tick move, that can very well happen on an EIA announcement. And so that's really where those spreads can come in handy. But yeah, it's like time decay. Think of it just like time decay. So again, we went through an example basically. You know, we talked about credit strategies on binary options, how you can effectively, like the euro example, say, hey, I think that the euro will stay below this price. I'll sell something for $10. Well, if you look at that, you say, hey, why am I selling something for 10 and putting up 90 to do it? Think about it on a return on risk scenario. All right. If I'm doing something that I can hold for 3 hours and I'm making $10 to put up $90, right? And yeah, like Charles, if you're doing well selling time decay and premium, you'll really like Nadex because you can supercharge it. So if I bring in $10 and I put up 90 to do it, that's 11% return on risk or return on capital. So, you know, Charles, I would highly recommend you checking it out and giving it a try if you're a credit spread type seller. Another strategy we talked about, spread strategies where you basically buy support, right? Like where you're looking at crude oil, the floor is 92, so you buy it at 92.05, you risk $5 to make 100. Or spread strategies like that S&P example that we just talked about, that's an example of getting a small edge in the market, okay? Where the market's actually at 1835.50, but I can sell this thing at 1838 and pick up that 2.5 point edge. So if the market stays the same, if it doesn't move anywhere, if I just keep my Nadex contract, I'll pick up the 2.5 points as the time decay comes out. If the market goes against me a point, in futures I would have lost a point. With Nadex here, I'd actually pick up money because it'd come down to that point. This is with Nadex.com, www.nadex.com. You can actually, and I'll type this in, get a demo account. Let me see. Here you go. I'll type the link in for you. Here's the demo account right there. So highly, you know, set up a demo, test some of those strategies. Like I said, there's videos. If you want the videos, here's our video link. And we kind of have some more in-depth detail about some of those strategies I just went over. You know, that hopefully will be helpful to you. But again, that's the video link. Here's the demo link. I'll type that in again. That last link there's the demo link, and thanks Sanford for posting that. That you can open a demo account. But yeah, open a demo account, test it out. ZF, that's something we can't answer that. That's something you have to ask your accountant. They basically send you the form and you would report it, you know, the way that your accountant tells you to. Yeah, they send the 1099-B. Okay. All right, JW. Yeah, and JW said, hey, 2 weeks seems a little short. So here's the way it works. So you get 2 weeks just to test it. All right, 2 weeks just to test it. If you fund your account, okay, if you fund your account, so after 2 weeks, if you fund your account, and funding your account means, you know, just even if you just put $100 in it. All right, so if you end up opening an account and funding it with $100, so with as little as $100, okay, they will extend it for another 2 weeks. All right, so actually, so there's 3 steps. If you open an account, a live account, they extend your demo 1 additional week. Okay, if you fund your account with $100 minimum, they give you another 2 weeks. All right, so that takes you up to 5 weeks now that you've been on the demo. All right, if you place a trade, they will extend it as long as you need it, okay? As long as you're placing a trade. You go in and place a trade, for $1, and that's considered a trade, okay? So as long as you place a trade, you can continue to have a demo to continue to test. So basically, open the demo, you get 2 weeks. You decide to open an account, they'll extend it for another week. If you put $100 in the account, you'll get another 2 weeks. So that's 5 weeks of practice before you have to place a trade. After the 5 weeks is up, if you say, hey, I'm still not really ready for it, all you have to do, place one small trade, and then they'll basically extend it as long as you need it. So it's a pretty good deal that you can get. And it's very easy to fund. They have an e-check thing where basically you fund from the platform. No, Charles, I do not believe so. So again, it's something you check with your accountant on, but I can tell you just from a personal standpoint, I do not do that. All right, so does that make sense to everybody, how that works? So you open a demo account. So demo, 2 weeks, open real account, additional week, fund that account with $100 or more, 2 additional weeks, trade, demo as long as you need it in our trading. All right. So again, and two, this is one thing. Like as soon as you have a trade, then basically you get an email with the contract settling. The money's available for withdrawal basically as soon as the trade closes. So let's say that I get in a trade and I get out, that money's available immediately because it's fully collateralized. So it's not like it takes a day to settle. It basically settles in a matter of minutes after the trade. So that means if you have a really good day trading Nadex, you then just withdraw your money, go buy something nice. You don't have to wait 3 days for it to settle. And then usually by 3 days, if you're waiting for it to settle, you're make the reasonable decision that you probably didn't need to buy whatever you're going to buy anyway. Right? All right, does anybody have any questions for me? I want to see, we got a couple more minutes here before next speaker comes on. Okay, question, where's the demo link? Here you go. I'm going to type it in right below you, Marcia. So that's the demo link. So demo link right there. You're welcome, very welcome. Yeah, it's in the announcement area too. Ako, it might be you're out of the US. You might just have to kind of put the phone number in a US type way. So like I said, it's not available for live trading for non-US right now. They're working with an FCM that's going to come on board hopefully soon that will allow non-US accounts. Okay, yeah, if you're outside the US, you can look at like IG Group. IGgroup.com is a similar product for those of you outside the US. And that's basically who's the parent company of Nadex. You can check out. Okay, all right, does anybody else have any questions? What kind of trade track? Yeah, we are recording. We'll get you a copy of the recording. We'll send you the link probably tomorrow, most likely around lunchtime or afternoon. It takes us a while to kind of get all the, what we do with the recordings, we cut them all and split them where it's each session. So, if you guys that are here with me, you say, I don't want to listen to Morgan again, You know, you don't have to sit through it if you don't want to. You cannot currently get Nadex through FXCM Echo. You can email them and ask them to add it. That would probably help Nadex get to more people. But you know, you could, if you go to IG Group, if you're in London or the UK, you could open an account with IG Group direct. If you had to pick one of the biggest pitfalls to watch out for while trading Nadex compared to other traditional vehicles like stocks or Forex, what would it be? The pitfall, I would say, Matt, that's a very good question. The pitfall that I would say is that sometimes I tend to try to take trades just because I think, oh, this is easy money, you know, and I look at it more like a bet than a trade, and so that's a hard thing to do. But you know, it's interesting. I've talked to people who have said, hey, you know, I really have struggled in futures. I haven't made money in futures, but I make money in Nadex. And the reason that that's happening is that their risk is defined. You know, they're not taking the big losses that they would take if they were moving their stop or, you know, risking much more than they can reward. They're sticking to the plan. So I think Nadex helps you stick to a plan. But Matt, I'd say the biggest pitfall is that it can be very easy to get caught up and, you know, I'll just take this trade because it looks, you know, it looks good, as opposed to or the idea of the trade seems good as opposed to really having a method behind it. Marcia, if it's saying your email's invalid, send us an email, Marcia, support@tradingpub.com. I can get the guys at Nadex to help you. And again, here's the link, you know, if you guys want the video. There you go. All right, well, good deal. Well, that took us right about to the time. Our next speaker is going to be up in about 5 minutes. Yes, and Julius asked the question, is Nadex good for new traders? I think Nadex is the best for new traders. And the reason being, how many people, answer this question, how many people have made money in a sim account, but then you go live and it's a lot harder? Right, everybody would agree with that. It's a lot easier to make money in a sim account than a real account. And the reason being, when you go into a real account, you're actually, you know, the emotions are there, right? Well, the thing with Nadex, you can limit your risk enough. You know, some of those trades you take, you're risking $8 or $10, but you're in a real trade. And so I think that it's very beneficial to a new trader. You're trading real money, but you're not taking all the risk of it. And so I think that that's important. That's a good thing for new traders. Also, you know, you might make mistakes along the way. There's a lot more risk in possibly blowing up an account if you're not trading with defined risk. Yeah, and that's true too. Sometimes the fills aren't the same. So, you know, I'd rather put $200 in a Nadex account and trade very small size than trade a demo account, just because at least I know that the market's real. All right, let me see if I missed any questions up there. Okay, yeah, okay, good, Marcia, glad. Yeah, so if for some reason you had trouble signing up, maybe try opening it into a new window. They only use limit orders, CF, so there's technically not slippage. Okay, good deal, Marcia. So because there's not a stop order or market order, you have to use limit orders, so technically there's not slippage. Let's see. Okay, I might have given you the wrong. It's http:// let me type this in, mylanderpages.com/tradingpub/nadex2. There you go, Doriel. Yeah, that's right, Leo. You know, when you get slippage, it's definitely not their fault, is it? Yes, you can put bid and offers between spreads. So it does not mean you're not guaranteed a fill. But like looking at this, you know, this spread right here, 1832 by 18, or 1838.2 by 1838.6. If I wanted to place an order here, at 1838.5, I could do so. Okay, so place it, and so basically I'd become the bid if that happened. Okay, yeah, I gave you guys the wrong link above. So here's the right link. I apologize. Yeah, Mike, the next speaker is Dave Osmond of Metastock. Charles, the live session will go, Dave's going to go for about an hour after this, and then we're going to replay some of the other sessions, for those of you guys that might, just be gluttons for punishment and want to continue seeing education. So typically we would go for another 8 hours, but based on the fact we had the guys that typically do our London session weren't able to make it. Why is it not possible to open the link with the video? Mendigos, try copy and pasting this link. Okay. Try copying pasting this link, and it should take you to a page like this. Yeah, Marcia,